Australia boasts a strong economy, a stable democracy. Its cities, like Sydney and Melbourne, are often ranked among the most livable in the world. The nation is celebrated for its high quality of life, with clean streets, efficient public services, and a vibrant cultural scene. Its citizens enjoy a high standard of living. Families thrive in safe neighbourhoods, and the community spirit is palpable. Outdoor cafes buzz with activity, and parks are filled with laughter and joy. At the heart of this prosperity lies a robust banking sector, or so it seems. These towering institutions symbolize financial stability and growth, promising security and trust to their customers. Behind the gleaming facades and reassuring advertisements, a darker truth festers. The shadows cast on these buildings at dusk hint at the secrets they hold. Australia's banks, once trusted institutions, have been marred by scandal. Public outrage has grown as more revelations come to light, shaking the very foundation of trust. They have betrayed the public's trust. Customers who once felt secure now face uncertainty and distress. The impact of these scandals is felt deeply by ordinary Australians. This is the story of their corruption. As the sun sets over the city, the true extent of the bank's malfeasance begins to emerge, casting a long shadow over the nation's financial landscape. The scale of wrongdoing is staggering. News reporters scramble to cover the unfolding events as the public demands answers and accountability. Billions of dollars siphoned through opaque channels. Corruption runs deep, with illicit transactions and backdoor deals becoming the norm. Vulnerable customers exploited for profit. The elderly, the financially inexperienced, and the trusting have all been taken advantage of, their savings and hopes dashed. A culture of impunity where misconduct thrives. Behind closed doors, executives plot and scheme, confident in their untouchability. This is not the work of a few bad apples. It is systemic. It is entrenched. The entire system is complicit, with layers of corruption woven into the fabric of the industry, and it demands our attention. The public must stay vigilant, demanding transparency and justice to reclaim the integrity of their financial institutions. Westpac, a pillar of Australia's financial establishment, has a shameful secret. This secret is not just a minor oversight or a simple mistake. It is a systemic failure that has had devastating consequences. Between 2013 and 2019, the bank facilitated $11 billion in high-risk international transactions. These transactions were not just high-risk, they were alarmingly suspicious, involving countries and entities known for illicit activities. These transactions, riddled with red flags, went unchecked. Despite numerous alerts and warnings, the bank's systems and staff failed to act. Westpac's anti-money laundering safeguards were woefully inadequate. The compliance department was overwhelmed, under-resourced, and often ignored by higher management. Paper alerts piled up in boxes ignored. These alerts were not just numbers on a screen, they represented real threats and potential crimes. But the true horror of Westpac's negligence runs deeper. It is not just about financial mismanagement, it is about the human cost of their failures. The bank's lax oversight enabled the flow of funds to child exploitation rings in the Philippines. These rings operated with impunity, knowing that the financial system would not stop them. Children, some as young as 2 years old, were abused while live streaming for paying customers. These children were victims of a system that failed to protect them at every level. Westpac's profits were stained with the suffering of innocents. The bank's actions, or lack thereof, have left a permanent scar on countless lives. This is not just a financial crime, it is a moral abomination. The world must hold institutions like Westpac accountable to ensure such horrors are never repeated. Commonwealth Bank, Australia's largest financial institution, also succumbed to greed. The bank's intelligent deposit ATMs became conduits for money laundering. Criminals exploited a coding error to deposit vast sums of cash, bypassing anti-money laundering thresholds. $624 million flowed through these ATMs, often used to fund drug trafficking and organized crime. Regulators were slow to react. Despite early warnings, it took AUSTRAC, Australia's financial intelligence agency, 3 years to issue a fine. Even then, the $700 million penalty, the largest in Australian corporate history, amounted to a mere 3 weeks of the bank's profit, a slap on the wrist for an institution complicit in fueling criminal enterprises. The wrongdoing extends beyond money laundering. It permeates the very fabric of the financial institutions that many Australians trust with their hard-earned money. Australia's major banks, NAB, AMP, CBA and ANZ, engaged in a systemic fees for no service racket. This wasn't a one-time mistake or an oversight. It was a deliberate strategy to maximize profits at the expense of their customers. They charged customers for financial advice never given, exploiting the trust that people placed in them. Customers, often unaware, continued to pay for services they never received, believing they were securing their financial future. Even more egregiously, they deducted insurance premiums from deceased clients, showing a complete lack of respect and empathy. Families already grieving were further burdened by these unethical practices. To make matters worse, they invented baffling fee descriptions to obscure their theft. These complex and confusing statements made it nearly impossible for customers to understand what they were being charged for. This predatory behavior extracted billions from unsuspecting customers. The scale of this exploitation is staggering, affecting countless individuals and families across the nation. NAB's chairman admitted to charging dead people for 4 months after their deaths. This admission highlights the depth of the problem and the lengths to which these institutions would go to increase their profits. AMP deducted insurance premiums from the accounts of deceased clients for over a decade. This long-term practice indicates a systemic issue within the organization rather than an isolated incident. CBA charged 32,000 customers for services they never received. The sheer number of affected customers underscores the widespread nature of this malpractice. ANZ used over 70 confusing fee descriptions to disguise their illicit charges. This deliberate obfuscation was designed to prevent customers from questioning the legitimacy of the fees. These are not isolated incidents. They are part of a broader pattern of behavior that has been allowed to persist for far too long. They are symptoms of a pervasive culture of greed. This culture prioritizes profit over people, and it is this mindset that needs to be addressed if we are to prevent such abuses in the future. Section 5. The Royal Commission Unmasking the Truth. The depth of misconduct in Australia's banking sector shocked the nation. In 2018, a Royal Commission was established to investigate. What it uncovered was damning. The Commission heard harrowing testimony from victims of predatory lending practices, financial advisors pushing unsuitable products, and banks prioritizing profits over people. The Royal Commission exposed a litany of failings, conflicts of interest, a lack of accountability, and a culture of arrogance and entitlement within the banking industry. The Commission's final report was a scathing indictment of the sector's greed and misconduct. Section 6. The Human Cost, Fallout and Despair. The consequences of Australia's banking scandals are far-reaching. Increased mortgage rates and difficulty securing loans have placed enormous pressure on families and small businesses. The emotional toll on bank staff, many of whom were forced to engage in unethical practices, has been immense, leading to mental health issues and suicides. The scandals have eroded public trust in institutions meant to safeguard our financial well-being. They have exposed the deep flaws in our regulatory system, which has proven woefully inadequate in preventing or punishing wrongdoing. Section 7. A culture of impunity. Despite the Royal Commission's damning findings, few senior executives faced any real consequences. Westpac's CEO even received a $2.7 million golden parachute after overseeing one of the most egregious scandals in Australian corporate history. Fines, even those in the hundreds of millions, are seen as the cost of doing business, easily absorbed by these financial behemoths. This culture of impunity sends a dangerous message that the powerful are above the law. It breeds cynicism and erodes public trust in our institutions. Until real consequences are imposed, nothing will change. The cycle of exploitation will continue. Section 8. The urgency of reform. The need for reform is urgent. We need stronger regulation, tougher penalties, and a fundamental shift in culture within the banking sector. We need to empower whistleblowers and protect them from retaliation. We need to hold those responsible accountable, no matter their position or power. This is not just about money, it is about justice. It is about fairness. It is about ensuring that our financial system serves the needs of all Australians, not just the wealthy and powerful. Section 9. Reclaiming our trust. Australia's banking scandals are a wake-up call. They reveal a system rigged in favour of the powerful, where profits are prioritised over people. But amidst the despair, there is hope. The Royal Commission, fueled by public outrage, has shone a light on the darkest corners of our financial system. Now it is up to us to demand better. We must hold our banks accountable. We must demand ethical behaviour, transparency, and a commitment to serving the public good. Only then can we begin to rebuild the trust that has been so profoundly shattered. The future of our financial system, and indeed our democracy, depends on it.